Bitcoin is in a tough position and it kind of just keeps on getting worse. There's a few things that I want to show you here on very small time frames and then also very large time frames, and things that I think could potentially result in Bitcoin actually being sold off by quite a few people, things that could genuinely get very scary. And let's start off with the short-term stuff before we get into the longer-term things, because this is where it's most interesting in my opinion, even though the long-term analysis I'm going to show you is potentially much more groundbreaking. Here's the thing, is we ended up, setting our deviation up here, trading down. This is exactly what I warned you about on the YouTube channel, and because we were able to see this from quite a while coming, I actually managed to trade this and make a really nice profit. I actually managed to secure 37% profit here. I entered a short position on this drop and wrote it down with 10x leverage, which resulted in a 37% profit. And I want to shout out those of you that were trading this move on OKX. You guys are getting up to $30,000 in rewards. You've already taken advantage of it, which is absolutely phenomenal. But this is a limited time offer, guys. This ends at the end of this month. And what's really, really cool about this is you can get up to 30k in rewards just for signing up. And then, up to 10k just for signing up. And then another mystery box up to 10k just for depositing $50. You can boost that to 30 by trading. It's really cool because you can't get this level of extremely high financial rewards anywhere else as easily as you can get it on OKX, right? Because on something like Bybit, where they have the same offer available, you need to deposit exorbitant amounts of money to qualify for those kind of for those kinds of rewards. But with OKX, it's actually just down to luck, which is really cool. So shout out to those of you that have taken advantage of it already, and if you haven't, I don't know what you're waiting for. This is huge, and OKX is an amazingly reliable exchange that have been around for about 6 years now, since 2017. Well worth checking out. But what we have had since then is the price set a low right here, and then actually managed to sweep that low just now. And we didn't do it in a particularly horrific way, I'm not actually too worried about what happened here. You could definitely reasonably say that we set a double bottom and are now going to start traveling upwards. And like I said, I think that would be a reasonable conclusion to draw. But what I think we're also potentially looking at is one of those situations where the price kind of quickly, in this case, it more or less just trends down. In this case, we're fighting that trend a little bit. We're forming a bit of a rising wedge, but then we're trending down again. And, either we're forming another rising wedge here and resuming that downtrend, or we're just kind of, quickly moving down here and then more slowly moving down again. And this is important because I've covered this kind of price action with you guys quite a bit on this YouTube channel, where we do something like move up quickly and then move up slowly. And I've generally told you guys that this generally results in a second leg up for Bitcoin. It's not what usually happens in traditional finance markets, but with Bitcoin it is. And the thing is that in opposite, this is actually a lot less reliable, where we quickly move down and then slowly move down. In traditional finance markets, that usually means that we are going to break up. But again, with Bitcoin, the reason that we tend to kind of follow through in the direction of the original price movement is because what it shows us is that we've just got kind of too much selling pressure. And there's a few reasons that this is kind of potentially apparent. Look, I'm not trying to draw any particular conclusions here yet, but take a look at the facts, guys. That's obviously what this YouTube channel is about. S&P 500 over the course of today's trading session. Remember, today is a new day. It is a Monday. Over the course of today's trading session, well, it started off by gapping up. So that's a really strong start just to begin with. And it's now back up in this resistance level. So to me, it's looking really good. The fact that it gapped up from Friday's trading session and is now trading higher is a great sign for the rest of this week. The dollar as well has dropped down over the course of today, which is obviously why I think the S&P 500 had managed to rally up. Obviously, we see a very, very clear inverse correlation here. And generally, what we're going to see is that if the dollar moves down and the S&P 500 moves up, we're generally expecting to see Bitcoin move up as well. But it didn't. And what's happening here is you've basically got, right, the way I look at it is you've got an opportunity that Bitcoin could have taken, but didn't. We've got an opportunity that Bitcoin could have used, but didn't use. And where you've got something that could have been bullish, but didn't actually manifest into reality, to me, that potentially indicates we're looking at the bearish outcome happening, or at least it being a little bit more likely, purely because we're letting go of good opportunities. And when you do that, the market generally could be signaling to you that it's in a little bit of trouble. And that trouble doesn't end here. I'm going to take this one step worse with you guys, just again, focusing on the facts. If we look at some of the key indicators that I like to use, like the Ichimoku cloud, we've already found one rejection up here. I covered that with you in my last YouTube video. Those of you that are subscribed, shout out to you. You know all about it. Not my last one, the one before that. And, you know, again, we're finding resistance in this cloud right now. No surprises here, guys. That's actually what I spoke to you about on that YouTube video. So again, those of you that were watching it are going to know what I'm talking about here. And it's not just on the 1 hour time frame. If we take a look at this on the 4 hour time frame, we've now got this resistance developing overhead, where if Bitcoin does manage to mount a rally, we kind of had a nice window where Bitcoin could break above resistance pretty easily, you know, basically at any point over the next few days. But if we don't manage to get that pump up very quickly, and we look at doing this towards, I don't know, like the 18th of February, according to this, we are going to be looking at a much bigger, more substantial resistance cloud on the 4 hour time frame. And I think that's something to be at least somewhat concerned about, right? I mean, I'm not saying that this is the be all end all of the market. I'm not saying that this is the end of the world by any means, but it's an important indicator, in my opinion. It has been for a very long time. You can back test it, and of course, if you don't know what this is, if you're not familiar with it, go ahead and watch this video. Just type this into the YouTube search bar. You can get my video where I tell you how to use this indicator, what it is, how to get it, and so on and so forth. It's also part of the wider 𝐷𝗥𝐻 courses, which, by the way, when you follow these steps on screen, you can get inside a VIP and watch what I'm trading in real time. You get the full behind the scenes access to every bit of information about every trade I make, from my consideration phase to execution to now currently managing a very profitable position, how I'm going about doing that to make sure that I maximize my profits, and if I'm losing money, to make sure that I cut my losers short as well. Super, super important stuff. Those of you that are in VIP have obviously been slaying it lately, so shout out to you guys. And of course, once again, I want to give a huge shout out to those of you that are also on OKX, because doing things like checking out OKX, which is completely free, or joining VIP does support the channel, and obviously that goes a very long way, so thank you all very much for doing that. But Ichimoku Cloud right here also potentially starting to pose some problems, and again, we're taking it another step worse here, guys. EMA resistance. Look at this. This is something that I take very seriously, and we are now definitely seeing repeated rejections off this level. And I think that's something that's important to keep in mind. You know, the fact that we are starting to get some repeated rejections off this level is a bit of a red flag, guys. You know, I mean, we kind of expected it, so it's not like it's particularly surprising, but it is a sign of weakness, in my opinion, where momentum has clearly shifted to the downside, and it's rejecting our price already, you know? So we're getting quite clear signs here that things are potentially in a bit of a shaky place. Now, on the daily time frame, and when we zoom out much further, we're still in a really good place. I want to remind you guys about that. You know, one of the key things I was saying about our Ichimoku Cloud is that we've got a lot of support, you know, and unfortunately this isn't useful yet, right? This is kind of more early March territory. We're going to be able to use it around these price levels, though, which means that, you know, if we do kind of mess about and then kind of come back up and do something like this, we're going to have really good use of this support potentially on the daily time frame. And that is something, again, that I take very seriously. If you take a look at the interactions we've had with the Ichimoku Cloud on the daily time frame, they are consistently very powerful for the market in terms of predicting where resistance might be, and of course predicting where support might be. Let's take a look at where support is on the daily time frame. We managed to get one little bounce off here. It's little, it's nothing crazy, but it's something nonetheless. We got a huge bounce off here, and we didn't actually touch the cloud before this anyway, other than over here when we got another bounce anyway. It was a very long time between this touch and this touch, but we still got a massive rocket to the upside here. This was from 46k all the way up to 59. That is a very substantial move in my opinion. Bam, right there. Look at that, 26% from low to high, and it's just consistently been useful since then. Look, another, like I said, another kind of move off right here. A very consistently reliable indicator, guys, on the daily time frame, even on the 4 hour time frame, you know. So it's definitely something to be taken seriously, in my opinion, which means that we do have that support coming up, but not quite useful at the moment. Like I said, though, bright side, EMA support, it is here. You know, I like seeing that we do have a bit of this EMA support where we are right now, and it does stretch a little bit lower, showing us that we could end up dropping a little bit lower. But I'm going to take this as another step worse, guys. I'm just going to keep throwing this at you until I show you why I'm not actually that worried anyway, because I am going to be balancing this out in just a bit. So do smash up the likes if you're excited for that. If we take a look at the long and short ratio, guys, we are looking at a ratio of 1.75 long positions for every short position. We're looking at 63% of Binance retail traders being long right now compared to 36 being short. That is an abnormally high percentage of people trading the long side than the upside. Same for top traders as well, surprisingly, on Binance. Different on Bybit. I'm sure that if we actually look at all of the data, we're going to start seeing a little bit of discrepancy, a few discrepancies in the market. But what I'm most interested in is retail, showing us this 1.75 ratio in terms of longs to shorts. And this is also really interesting, guys, is the Fear and Greed Index. We've got, I think, a pretty overall healthy rating of 48. You know, we're looking at a neutral reading of 48. I say healthy, I take that back, actually. It's healthier than where we were before, like in greedy territory last week. But we are still quite high. And that's one of the reasons that I actually feel fairly positive about what I've been talking about so far in this video, is that, you know, we've got a good number of kind of concerning signs here on this chart. And it's accompanied by showing us that people who are not generally good traders anyway, retail, the 90%, people like you and I, let's just face it, the majority of traders, normal fucking people that don't work on, you know, Wall Street in some fancy high-rise building, they're generally wrong, right? I'm not saying that you're wrong, I'm not saying that I'm wrong, but generally retail traders are wrong. And we've got an overwhelmingly high percentage of people that are long right now compared to short, especially if you consider it in terms of ratios. And the fear and greed index kind of shows us that we're not really fearful in this market right now anyway, but we're still in a bear market. You know, I mean, we haven't actually done that much anyway. Even now, we haven't. You know, we're only up by like 50% from our high, and people have very clearly forgotten that. And I think that that is something else which potentially makes this worse. And here's the thing, is if we take a look at this chart on a longer time frame, this is actually the key thing that I wanted to talk to you about in today's video, is this 1 week death cross. Now, you guys are going to know, if you've been paying attention, that we also just had a golden cross on the daily time frame, so we're getting all sorts of indications right now on this chart. But what this is essentially is where our short-term moving average, the 50-day in this case, crosses above our long-term moving average, which is our 200-day moving average. Now, if we take that to the weekly time frame, we've just had the opposite happen. It's literally happening right now on this candle. They haven't quite touched, have they? No, they haven't, but they are. I mean, that's good enough, to be honest. I mean, there's absolutely nothing that can prevent this from happening now. And the thing is that when we see this as a golden cross, that's generally a really good sign that the market could be trending up. And historically, that's been extremely important for Bitcoin to be able to form a bull run. But it's also been the opposite when we got our death crosses. See, when we got our death crosses, like here's a great example right here. We got this death cross right here. The market did rally up afterwards, but then we collapsed massively after that. And there's a lot of examples of this happening right here. Let's take a look at, here's another death cross right here. Nothing happened. Let's take a look at another death cross right here. Happened over here. We actually ended up dumping it down massively afterwards, but only after a golden cross, so it can be unreliable at times. Another death cross happening right here. And yeah, we kind of didn't do anything, but then we got a really big drop. So, you know, these are definitely important. You can go back and you can see a lot of examples of how this has actually been quite important, both in the bullish and the bearish direction. And now what's very significant, what's actually happened only now for the first time in Bitcoin's history ever, is we've just formed a bearish weekly death cross. And we've come close before. If we take a look at what happened back here in December or early 2016, December 2015 or early 2016, we came very close to having a death cross where this 50-week moving average crossed below the 200-week. But, and by the way, it's also worth noting, if we take a look at the start of this chart up until the first data point on this moving average line, it takes about 200 days to, about 200 weeks to even form the line, because we're looking at the 200-week moving average, right? So that's basically 4 years of price action until we get 1 point on this line, which is why this is the first death cross we've ever seen. We just haven't had an opportunity to come close to one very much throughout Bitcoin's history, other than, like I said, right here, where Bitcoin did nearly form that death cross, but we didn't actually get it. And if you look at other points kind of close to our market bottoms, we didn't really get that close to the moving average line before. 28% over here, and if you measure it at the thinnest point over here, about 21%, we didn't get that close to forming a death cross on these two occasions, and we did get very close right here, but we didn't do it anyway. But again, this time is different. This time we actually have, where we've seen that our weekly momentum has become so bearish on the shorter term timeframes compared to the longer term time frame that we are potentially entering a much bigger problem basically in this market. And here's the part that you really aren't gonna like. Here's the part that you really aren't gonna like. You can just preemptively dislike the video now. Is that this is one of those things that you are not gonna know if they've come into fruition until a very long time later. And crucially, when things like death crosses happen, people don't tend to pay attention to them. They don't tend to pay attention to them because of exactly the dialogue that's going through your head right now, because it's just it seems kind of hard to believe. It's hard to imagine potentially for a lot of you guys, especially if you've stuck around in Bitcoin for this long, that, you know, look, when we get a death cross like this, what it's generally indicating is an extremely long, prolonged, just shitty bear market, right? Many years. In this case, from Bitcoin's perspective, it could be like 6 to 8 years. Like, just to give you like some sort of, I would say, realistic idea of what a depression for Bitcoin could look like. I mean, extremely long. maybe not even that long, maybe like 4 years, 5 years, but it's still a very long time. And a lot of people ignore it just for that reason, because it's kind of just hard to swallow those ideas. Now, to be clear, I don't think that that's going to happen. I've never actually said that I think that's going to happen. I've obviously been open to it, because if I'm not open to it, I wouldn't be a responsible trader. I wouldn't be a responsible analyst. But I don't think that's going to happen. However, I want to make this very clear once again that this is exactly the kind of thing that people ignore when we start entering those phases in the market. So if you think that that's where we're going, this is an extremely obvious sign that the market is showing you, which, you know what, guys? Here's the thing. If we actually take this tool right here, take the bars pattern and just kind of replay, let's say like this price action right up to here, and if we look at something like this repeating again, potentially even taking us lower, something a little bit like this moving average crossover is going to be such an obvious sign of a warning, basically, that, you're going to feel like a bit of an idiot if you ignore it and Bitcoin ends up doing something like this. And do I think it's possible? Yeah, of course. I think it's possible, because I don't act like things are not impossible. Anything is possible in these markets, especially with Bitcoin. But at the same time, I just don't think it's probable. At the same time, I'm not entirely convinced that we would even do something like this. And again, the thing is that, look, I would have said the same thing about the death cross that we had previously. The death cross that we had up here, I definitely would have said that, you know what, I don't really believe in this being a problem. And for a while, I would have been right. But of course, eventually I would have been very wrong. And again, this is the kind of thing that people generally do just completely ignore. Now, the thing is, and this is where I start to brighten up this YouTube video a little bit, is the weekly time frame is an extremely long time frame to do analysis on Bitcoin, especially when we use literally lagging indicators like the moving averages right here. I mean, it's just too long of a time frame to get an accurate picture of what's going on. And I'll give you a great example. It's the Ichimoku cloud that you guys know I love, has been incredibly reliable on the daily time frame, but pretty unreliable on the weekly time frame. We didn't even get a key rejection here, other than I guess what happened right here on the weekly time frame back in 2015-16, and then we didn't really even use it as support during the entire bull market of 2017, 2016, and then as resistance, I guess we kind of used it, but we actually traded in it for a very long time. Look, it's clear that this is just a bit random. We used a bit of the support on the weekly time frame back in 2022, but again, more or less looking random. And another key thing to note is, we can actually see it on this chart right here, is if I just put a line at every point that the cloud becomes bearish, which is generally going to be a really big problem for Bitcoin, it actually, this is the funny thing, is it actually lines up with market bottoms, not market tops. It actually lines up with the market reversing eventually and not continuing to move down. And if you look at the same thing on the daily time frame, which it's happened too many times, so I don't really want to show you, but I'll just show you like one or two examples. If we take a look at this. It flips bearish here, market absolutely tanks. Look at this. It flips bearish here, market absolutely tanks. And the thing is this happens in the future, right? So if we replay the chart here, we already, this is the cool thing about the Ichimoku cloud, is we already know what the Ichimoku cloud is going to do. Like, it actually predicts the future, which is really, really cool. So I'm not saying that it happens in the opposite way, where when it turns green, we're in trouble. But what I am saying is that when it turns red, historically, it has been a very bad thing. That could be something to keep in mind. Look, turns red right here, it didn't do anything. On this occasion, turned red, and a little bit later, we crashed down massively. So, on the weekly time frame, that didn't happen. On the weekly time frame, quite the opposite, which is one of the key points that I want to make in this YouTube video, is that, yes, we are doing something for the first time ever. It is a weekly death cross, and it's extremely important to pay attention to. But at the same time, can you really analyze Bitcoin on such a long time frame? We just don't really have that kind of data. And it could, you could decide, yeah, you can, because actually things are different this time, and Bitcoin's never existed in an interest rate hiking economy or whatever, environment, and obviously that is going to cause some problems for Bitcoin. And I would agree with you. That there are a good number of reasons for why things are different right now. But at the same time, I'm only going off what I've got on the chart here, and I'm also only going off what kind of makes sense with Bitcoin fundamentally. And I don't think that this ultra long-term analysis is actually the smartest thing you could do. It's why I don't really even focus on things like monthly time frame analysis. I barely look at the weekly, and I certainly never really look at the yearly time frame analysis for Bitcoin as well, because you just can't really extract that much data from Bitcoin. It's not like the dollar, where you can very comfortably look at the monthly time frame on the dollar and extract some really good bits of analysis out of it. You can't do that with Bitcoin because it's just not been around for that long. So what does concern me is what I'm seeing on the short-term timeframes, and I think that Bitcoin could definitely be due for a further drop lower. The thing is that this wasn't particularly strong support in the first place anyway, and we have now stuck around here finding support in this rough range for about 3-4 days. Now, that's not a particularly long period of time, especially if you compare it to what happened previously, where we were basically stuck sideways for like 3 weeks. But at the same time, I'm not expecting this area, like I said, to be particularly strong support. And if it does fail at support, we do have a very substantial drop until our next area of support, which you're going to know all about, again, if you were subscribed to this YouTube channel when I was covering it in my recent videos. Take a look at this. Every time we kind of get rejected from this area, generally we saw really, really, really big drops, and the same on the upside. The very same on the upside. We generally just go all the way up through these ranges. So these are what I call kind of empty liquidity ranges, and the market does love to travel through them quickly. Again, these present really nice trading opportunities, and I do just want to highlight that OKX is a brilliant place to take advantage of it. Like I said, I traded this move on 10x leverage, and from where we are right now to potentially my next targets, which would be down here, I'm looking at another 9% drop, and with my leverage, I'm going to be making 90% profit. That's on top of the money that I've already made. That I've already made. I'm already in more than a 30% profit, or somewhere around there, depending on where the price is, because it's fluctuating quite a lot. I'm already in about a 30% profit, but I'm looking at 90% more on top of that, which means more than doubling my money. If I have a total profit of 120%, that's basically applying a 2.2 times gain on the money that I entered my trade with. It's pretty crazy how you can make that kind of gain so quickly just trading moves like this, but that's what's possible with leverage, and when you're managing your risk correctly, you've actually got some really cool opportunities on your hands. So definitely check it out with the links in the description down below. And I also just want to highlight to you guys, some of you would have seen that when you go to OKX, there's a very small quiz that you need to do in order to start trading derivatives. I don't want you guys to worry about that. Obviously, you should know what you're doing, and you should research everything very thoroughly, because this is risky shit. But at the end of the day, if you don't do well on the quiz, don't worry about it. Everything will be okay. But that is something which I know some of you were a little bit curious about, because some of the questions are a little bit weird, but it is all okay. Just give it your best shot. And like I said, guys, with up to 30K, that you can get in rewards right here, super easy to access compared to, the very high tiers that, other exchanges might require. This is a great time to get in on this exchange that have been around for a very, very long time, offering pretty much everything you could want. And I made a tutorial on it just yesterday. Go check it out. That was a very long video, and there was a lot to go through. And I think you're actually going to really enjoy this platform. The cool thing about it is they also have this mobile app as well that you can get on your iPhone or Android phone as well. So very, very cool. There you go. Hope you have enjoyed this video. If you have, you know exactly what to do. Follow these steps on screen to get inside a VIP and my course, and I'll see you all in the next one. Make sure you hit up the likes, subscribe, tick the bell, and I'm out. Cheers.